Good morning. That's what it is for me. 4:11 a.m. Monday morning. Good morning, good afternoon, good evening. I hope that everybody enjoyed their Thanksgiving holiday. I am very grateful that it was understood or at least allowed that I took first holiday as far as taking time off from being in the chat and the email in 8 years. I'm very thankful that during the process of that, and because we have been in this tight, consolidated range now for better part of 2 weeks, that we were able to get rid of a whole bunch of pikers.
Tell you what's required. You are required to work your fucking ass off at this firm. We want winners here, not pikers. A piker walks at the bell. Piker asks how much vacation time you get in the first year. Vacation time? People come and work at this firm for one reason, to become filthy rich. That's it. We're not here to make friends. We're not saving the fucking manatees here, guys. You want vacation time? Go teach third grade public school.
Pikers are what I consider people that join, never get involved, don't want to take advantage of free, my own time, one-on-one calls to really just narrow down what really works best for them. Don't do anything. They just come in. They think that you're going to magically produce fucking mushrooms with rainbows on them and make the market move when the market's going to move when it moves, which is why you guys all know where my positions are going out into March, into December of next year. And again, very, very thankful that they are gone and they will never, ever be back, because one of the things that was asked to me over the holidays in a number of emails was, so what's your Thanksgiving promotion? What's your discount for the promo? And I have never, ever given a Thanksgiving or New Year's promotion in any way, shape, or form. The reason why is, as many of you know, if you want to switch from the monthly to the annual, I have a very large discounted link. Many of you have already used it. A lot of you guys that have been with me for years are on much better plans because those were from the early days and you've continued on with them. But it's a disservice to regular members because, wait a minute, I joined 2 weeks ago and this guy's getting a discount? I've never agreed with that whole idea ever. Never, ever. And at the same time, getting rid of these pikers. I'm offering people a private equity entry level into what's to be one of the sexiest IPOs that have hit the market in years. Take advantage? Don't take advantage. I will never bend over like a monkey ever again. I'm a fucking gorilla. And that's why we go into this. So we are into the final few days of November. It's not a complete week because Friday is December 1st, but I will give you a healthy reminder for those of you that are not tracking, and I've just been outside and it is absolutely gorgeous. The full moon takes place on November the 27th, which is Monday at 4:16 in the morning. It is beautiful. Go outside, have a look for those of you that are awake. So, October 31st, October 27th. October 27th was the Friday where we were a little bit worried because Israel was going to invade Gaza, and we took off those QQQ calls for November 17th, November 24th, December 1, whichever date you wanted to, because we had the full moon coming November 27th, which we already knew. Got back into them on that Monday, November 1st, and had already hit targets. One, we were there on November 3, November 4, or sorry, November 3, November 2, November 6 with the FOMC meeting. We had already hit upper targets there. 4 days into it, never, ever planned on seeing this blow off top that you are currently involved with. Talk blow off top. From November 1st till now, we've had 3 red closes. Only one of them has been bigger than 10 points down. Only one. We have had a few gap downs in the recent 2 weeks, but as you can see, they're highlighted in red. The range has disintegrated into nothing. Nothing. On Tuesday, you had not even a 17-point range. Now, I left Tuesday prior to the close, prior to NVIDIA reporting their earnings, which I'll get to as well. On Wednesday, banger day, 15-point gap up, 23-point range, and you hit over here your 45, 68, 43. Now, you haven't completely filled the gap, and I'll get to it in a minute, but then you have here your Friday. Friday, half-day session, 7.5 range. And the importance of that is because these are days when you sell premium. Selling premium is always going to pay you. In fact, go over that. Here is our Monday. And actually looking back, I mean, you go back all the way from October all the way down. We had that one Friday, November 10th, where it just got bamboozled on that day. We broke above 1% on November 10th, closed above 1% on November 10th, had no choice but to go and roll that trade. Broke 1%, broke the safe edge, had to roll that trade, and that trade has had to be rolled a second time because of this 2-week range that we've been in. But again, you're looking there. We took it conservative going into the beginning of this with safe trades, 25, 15, 15. You just go into last week alone. Last week, Friday, 100%. Had to close the trade, but you got 100%. Monday, had to close the calls, but you got 100%. Playing on the puts, 100%. 50% there on Tuesday on the 45, 55, 45, 50s. Now, I wasn't there on Wednesday or Thursday, but I was able to post there in the room. Get to that in a second. Where are we? Yeah, here. I did get online while I was away and did post there. You got your 2022, 2023 highs line 45.65. The final gap is at 45.77. And here, 45.68 right at the beginning of the day there on Wednesday. Use that 45.65, which you closed below. I looked at it. I didn't screenshot it and move it around and this and that because I was actually at dinner. You got better than 100% on that trade. Use the same trade there on Friday, even though it was a half trading session. You got $2. $2 credit on Friday using that, just that alone. So you do what you do. But sticking on with the spreads, Tesla, 242.25 is here. Mark and Pedro, because these are two people that took advantage of me offering wide open access. They wanted to trade Tesla. I mentioned Tesla. We actually talked about Tesla, and we went with the 245, 240, 250 calls. 96 cents credit. Where did Tesla close? Tesla closed at, I'll get to NVIDIA in a minute, 235.45. So you look at that for what you want, and that is a dollar on your $1.50. Now, talking about rolls, right? I had this trade of the week out November 17th, looking for a red week because we had already had the 2 green weeks. $3 minimum. We discussed this about where it needed to be rolled and how it was better to be rolled out to December the 1st. Now, rolling spreads. You have to know how to roll spreads. Not knowing how to roll spreads is like not knowing how to wipe your mouth when you're eating a bowl of spaghetti without a fork or a spoon or a knife or a pair of chopsticks. You're going to have tomato sauce all over your face. It's like saying that you're a wine connoisseur, but you go to wine tastings with a straw. You got to know how to roll. But with a $3 credit, minimum of $3. You have what I call a free roll. Since it will cost you only $2 to roll the trade, you still have $1 worth of credit that you can use to roll on to your next trade. So even though your next roll, without having to go wider, is not going to provide you a $3 credit, you're still going to be able to produce yourself somewhere in the range of $1 to $1.50, 98% of the time. This, like I said, rolled out to December 1st. Now, because I was not there and it was on anyone else's complete understanding about that, I had one out for last week, the 45.20, 45.15s. $3 or better. Again, having closed at 45.59, these as well needed to be rolled. And rolling these, again, has that ability that because you have $3 in credit, only $2 at risk, it will cost you $2 to roll the trade or less, depending on when you rolled it. And you still have credit that you are working with into the next trade that you roll into. Thus, you don't need to go wider and expand it by another strike and collect more credit. You actually still have another trade. I look at these as having a free trade inside of that trade. And if you don't understand what I'm talking about, again, because being a member, you have full access to me, one-on-one call with me any weekend you want. If it's going to be something that has to be done during the week, we will try and schedule it during trading hours and get it done, because your success is more important than mine. I'm already there, and I'm already far beyond there with what's coming up with our glacier. So the ability's there for you to take advantage of it as much and as often as you like. But let's get on to the charts. So all of this movement, and we have had two plus 1% days, which were on November 10th and then again on November 14th. Again, with the trades that we were taking, everything has been working out except for that one on November 10th and those two trade of the weeks that we spoke about. The November 10th one needing to have been rolled. Holiday. That's thank you very much for allowing me to take the first holiday in 8 years. SPX, sticking with these spreadsheets before we move on to the charts. Again, seeing the way that this is acting from a perspective of not having any dip at all, other than that 49-point dip that we had back here on November 9th when there was a glitch in SoftBank moving when it was the treasury auctions, and they were ransomware and could not produce the transactions, and literally were running around the city with USB sticks to process it all. That 49-point move right there on November 9th, that is the only dip that we have had since we bottomed there the day that Israel went into Gaza, October 27th at 41.0378. So structure is completely not there. There's very, very difficult on anything other than the IWM itself to find a structure to this production of what we're in order to be able to decipher, okay, well, we're in wave one, wave two, wave A, wave B. It's very, very, very difficult. Thus, because of the way that it's structured, it's much more set up as a blow off. And a blow off meaning that this move that we've made up will be retraced, not completely, but very much to fill a large number of those gaps. And that would be very bullish. If we fail and continue to produce slightly higher, as I said, we went into last week. Is it Monday? Monday. Look, we close green on Mondays. We close green on Mondays. That's what we went into there. And what did we do? We closed green on Monday. as I mentioned there on, where was it? Yeah, here. So structuring where our moves are, where our pivots are from that, and because it's being a very, 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 tight, small trading range holiday week, the SPX has plus 1.5% potential upside, but you have 4 to 6% guaranteed on the downside. Now, while we're here looking at the Monday email, NVDA Tuesday, full moon on November 27th. I have two bear call ideas for earnings, 480 and 500. The 480s, $1.50, $1.40, $1.50 on your $1 risk. Doesn't take a genius to figure it out. That's better than 100% return. Over here, the 50250s and the 500s, $1 credit, $1.50 risk, $1 credit. Where did we go? Not that. We want this, and we will move over to Tesla, NVIDIA. NVIDIA closed at 477.76 on Friday. Thus, not only one, but both perfectly paid out. So again, coming down here onto this, into the Tuesday email, looking at, so SPX has plus 1.5% potential upside with 4 to 6% guaranteed downside. The plus 1%, plus 1.5%, 45.59, 45.82. So let's go on to our SPX. And again, looking at where we came from to know where we're going. 4607, 1, 2, 3, 4, 5, perfect. And made it right to the 161.8 extension. Show you over here on the OPEX chart. Boom, boom, boom. 161.8, 4101.54, 4103.78. Doesn't get better than that. And why we were bullish going into November. However, as we went into November, we had already reached, for me, the level that I completely expected would be the top, was right up here at the October top, right around the beginning or middle portion. Actually, yeah, the beginning. November 6th, November 7th, November 8th, November 9th. And I'll show you on the other charts, technical, why this also indicated absolutely this is the top. And then you had your little break and then your big gap up over here on November 15th. The event that took place on November 15th, I cannot remember what it was. Something to do with how the United States is in much better shape than anyone else in the world because Joe Biden doesn't shit his pants on a regular basis. He only does it once a week. And we are up 464 points off of that October bottom. We are up 11.32%, and we have one fractional remaining gap left available from August the 1st from our highs, 45.68, up to that 45.77. This one here, I'm not really calling a gap to be filled, only because it's only 4 points. Yes, we can fill it, and yes, it fits within that plus 1.5% level. But it just doesn't seem that attractive. However, bringing you on to the OPEX view that we had, calling this an A and a B and this being a C, again, sticking just with this view because there is zero structure whatsoever. The 149-point drop is the only drop that we have had. Thus, this is the view that I am continuing to stick with for now. Boom, boom. We can and could reach to 46.33 above the July highs. Does not fit into anything at all. And all we have to do is not break down below that 43.83. 44.31 is now minus 3%. 43.40 is now minus 5%. Breaking minus 5% would break, currently minus 5%, would break below that 49-point dip bottom and thus create havoc. When I say havoc, what I mean is all of this, which has been done, would all be retraced. because we would be breaking down below this 43.55 right into that 43.40 area, and thus only two gaps with 1, 2, 3, 4 left below. And having broken that structure there, which you can clearly see was support, we would eventually be opening up the opportunity that we would get our retracement down here, which again fits with my bigger, broader view, which I have had for multiple months, shared with everybody, that we should not see the big rug pull begin until we get into around the end of Q1 or some part of Q2 next year. That's when it should begin. So that's with that. Now let's go over to our big brother, which is QQQ. QQQ has closed red 3 days in a row below the open, starting to show signs of weakness. You do have a higher high, 393, which was posted there on Wednesday, with actually the range being pretty good there on Wednesday because of that higher high. You did close green, but you do, as again, just like the SPX, have 4 green weeks in a row. So things are really starting to get very, very sketchy for further potential upside before a retracement of some sort, where 381.10 is now the 23.6. 373.69 is now the 38.2. 367 is that big monster. And that would be a 50 retracement as to where we are. QQQ, where are you? Here's our QQQ. Again, for me, even though you are looking at very detailed here, and unfortunately that's just what I'm going to stick with for now, I had the 1, 2, 3. This was a perfect 4. And because this is the wave 5, it is really starting to look much more like a blow off than anything else. And it is just really starting to get not only sketchy, but it's not so much that it's starting to look sketchy, but it's starting to look as if this has much more bearish potential to it than that bullish view. But getting oversold is getting oversold. Getting overbought, I'll show you in a few minutes. You can carry that over for weeks, and I'll show you how you can carry it over for weeks. So the big gap here over on QQQ is down to 377. That's the big gap from a week ago. So 377 will continue to be, for this week and next week, the threshold area, the litmus test. Any break below 377, and we potentially have something which we could get that move back down to 367. How and how easily done that is, we're taking this day by day, as we always do. But that is where your threshold is, that 377. 377 breaks, we have a very heavy duty, large potential that we could be getting our move back down there to 367. So see how that goes. IWM, very clean, very well structured. Looking as your 1, 2, 3. Apologize. 1, 2, 3. Perfect, barely 3. Failure here doesn't make a difference. Still threshed in this 180, 177. Need to get that break below 177 down into below 176 in order to think that the IWM has finally given it up, and you still have your big, humongous fake CPI gap, which is sitting there waiting all the way down to 169. So IWM is on its own. Your VIX, crushed your VIX on Friday, broke that 1339, and because of that slow, tight range in the holiday week, just graveled it on down there to 1255. And now, as many people are starting to be aware of, You've never had a VIX this cheap since January of 2020. If nobody remembers what happened in February of 2020, I recommend you go back and check out what happened. Dropping perfectly down, broke that 1339, and you are massively oversold on your VIX. New lows on the year, breaking that 1339. So tick tock, tick tock, tick tock. Your full moon is here, and you have a very great advantage to yourselves because we track things other than just your charts or your, yeah, we track other than just your charts. We track full moons, we track OPEX, we track this, we track that. My cats completely rampaged the office while I was gone, so I'm going to be spending all the day today renovating it. But here you are on your 5 minute. You can see it best. As I said, that trend line there from the all-time highs to the July highs, right around that 45.65 area. You broke it at the open there on Wednesday and came right back down underneath it. And that continues to be my personal big warning level because it's worked very well when you have it in there perfectly. This is your OPEX. And we are coming into our full moon. Full moon now, because this is the full moon, doesn't take a rocket scientist to see where your full moons are, where we are, and what our potential is. So, again, sticking with this in a very, very, very small, zoomed in point of view, your 5 day lows are 4,500. Your low from back here in the beginning of the week is 45.25. You have a gap to be filled here from Wednesday, which is at 45.55. 45.55, 45.25, and obviously breaking down below last week's low of 45.11. Those are your beginning stepping stones. You start getting down to those, and we again come back to test that 44.86. 44.86 gets eaten. You have this gap from back here on the 13th, which again, this being the fake CPI gap, your 23.6 retracement, and your big 43.83 down below. There is a plethora of opportunity as we have the full moon, a very, very cheap VIX. And as we move over to the stocks, which we'll go look over. Again, NVIDIA, perfect play, drop down below 480, spreads paid. I'm looking here at the RSI. This RSI, not as bad as other ones, but looking at the 4 hour and the RSI, the sell divergence that was in place just did not allow anything to take over as you had this big move off 392 to 502. Come on to AMD. AMD not as unhealthy, but still, you've had a sell divergence running since October 3rd or November 3rd. Just running sell divergence, price continuing to move higher, not getting any kind of price action off of that. Over here on Google, perfectly, almost to the penny, filled the earnings gap. So that is removed. Again, same thing. Look at your chart pattern for whatever you want to look at it as. Not a very strong, healthy look. Apple, this one again, mind-boggling. Here's your massively overbought RSI on the second, which was the FOMC day, and you've just had this incredible running sell divergence on the 4 hour and not getting any kind of price action to complete with that. However, you have filled every upside gap over on Apple. All of the upside gaps are filled. 2 downside gaps, which were created just recently. Nothing down here and below. Meta, again, Meta hated this 323. Hated it. Now, again, look through your structure. Very easy to see. Very clean looking 1, 2, 3, 4, 5. But again, with your running sell divergence on your RSI, you're not getting any kind of price action to commit to that until something else commits to it. Microsoft, even worse. new all-time highs, ridiculous sell divergence on the RSI, and again, no price action to make any kind of confirmation on it. So sitting again with all of these items and waiting for them to take place, which is what the full moons are for. And the full moon happening tomorrow is pretty fantastic from a wider, shorter point of view. Here is your SPX looking at the standard grandma, grandpa RSI and also setups. RSI 7155. Not as terrible as we were as we came up here into the June high. Not as bad as the sell divergence we had going into July. But we are up and overbought over here on the RSI. MACD, everybody loves the MACD, so go ahead, enjoy your MACD. 50-day moving average is down here at 43.45. Right underneath the big 43.83. And you come over here to the money flow 14. You have never had the money flow this overbought. I welcome you. Go and do some looking. So here's my RSI. My RSI, I like to use the RSI 5. And again, coming back here, since we came right to that 43.83, overbought. Okay, that's it. I'm getting in my positions. And we just continue to go higher. RSI 86, 43.83, 50-day moving average. Come over here on your ease of movement, and you can see it's just been an absolutely incredible divergence on the sell of movement since November the 3rd. Since that move to 43.83, with all of those gaps, it's been horrific. Money flow index on the 5, insanely overbought, which you can see come right in time with most of your peaks 1 or 2 days prior to, and here we are still very, very overbought. So I am very much looking forward to a nice, clean ending of November, beautiful full moon on Monday, absolutely gorgeous introduction to December, and with many of the pikers gone, I can dedicate myself to those of you who actually appreciate it, take advantage of it, and more importantly, succeed from it. So have a beautiful, beautiful Sunday. Enjoy the last couple of days of this food fest that everybody's been on, and I'll see you in the chat room on Monday.
I'm not leaving. I'm not leaving. I'm not fucking leaving! The show goes on! This is my home! They're gonna need a fucking wrecking ball to take me out of here! They're gonna need to send in the National Guard, a fucking SWAT team, because I ain't going nowhere!